All right. All right, we're live. So let's open up the charts. What's up? So real quick, I just wanted to go over today's trade. Today is Wednesday, May 6th. Let's jump right in. So in the middle of the week, I always start on the weekly chart when I'm determining my weekly and daily bias. So originally, I was thinking we are going to be in a consolidation. And originally we were on Monday, but after Monday, um, or sorry, we were in a consolidation on Tuesday, but Monday showed us that we got all the way down to our sell side target, which is the March 30th new week opening gap labeled here. And then Tuesday was an inside day. So because Tuesday was an inside day, I'm expecting I at the very least want to see us trade towards one of the extremes of this created daily range here. So the reason why it was a created range is because Monday printed and then Tuesday it didn't reach the external liquidity for a buy side or for sell side for Monday. So that makes it a inside day or an inside range. So I'm expecting I want to see after the accumulation, I want to see us distribute to either one of these directions, buy or sell. The reason why I had the conviction for us to go buy is because we already reached into the March 30th new week opening gap. So I wanted to see if we get any sort of signature telling us that price wants to go in the opposite direction, right? So that's the rationale, just looking at the daily. So then we go down to our entry time frame and talk about why I took this trade. Mhm. Seems to be a little slow. Not sure why. Okay, there we go. So let's rewind back to the opening for today's daily candle. This is what price looked like. Um, so like I said, we printed on Monday, and then Tuesday was an inside day. We didn't reach the buy side target, which is here, all the way up here. And we didn't reach that sell side target for Monday, which is all the way down here, range low. So I want to see us get to either here or to up here. Um, Slightly bullish bias. Why? Because if we look closely, we reached our sell side target, which was the new week opening gap here. And because of that, we reached this larger time frame PD array. I wanted to see if we got any signature telling us that we were going to go up in price. The signature that we got was as soon as we got into this range that we label in orange, what I saw was we have a 15-minute um, SIBI that was attached here, right? And from going into the sell side target, it gave us a reversal signature by by 9 p.m. EST on Monday night. We got a 15-minute candle above this 15-minute SIBI or this 15-minute PD array. And as a result of getting that candle, that print above, this immediately becomes a 15-minute inversion fair value gap, right? So we got the confirmation of a bullish market structure shift. coming out of this weekly time frame PD array on our entry time frame. We got it. So this was actually um, Tuesday's trade, which is to take the trade starting from here. That was the entry that I got, and then we exited for a stop loss, at a stop loss that I kept moving up as price was moving up, but the target was the target was actually a lot higher than just the New Week, or sorry, the New York session high. This is the New York session high here that I'm labeling for Monday. So that was the target, but the larger target, because we reached this longer term weekly PD array, when I see us do a market structure shift out of a larger term PD array, I'm targeting the opposing side's longer term PD array, i.e. when we get a trade out of here, from here, I want to see price get all the way up to at least the new week opening gap, the opposing new week opening gap in the buy side direction. We didn't end up getting that because, like I said, I was expecting it to be a bit more consolidation, right? Which is fine because our first price target was actually perfectly the Monday May 5th's New York session high. And from there you see obviously we started to trade downward. We started to sell from there. So that was Monday's trade. So I'm already in the mind frame of, okay, we can be converting bullish. Okay. So that was rationale for Monday. So going into Tuesday, which is today, right? I'm thinking, all right, we already showed a willingness to trade up out of this 15-minute inversion for value gap that I just deleted. So let's see what's going to be happening here, right? So market opens, and during this time where we see all the price moving, I'm not even looking at it. The only thing that I'm looking at, I have this a previous day high labeled as a potential area that I want to see if we get a trade entry. So I had this labeled as well as with a alarm on it. And then I also had this previous day low with an alarm on it, right? So that's Tuesday's low and high labeled. All right. So we trade through the previous day high. And then as soon as this 7:15 EST candle prints, I immediately drew this 15-minute BISI. Why? Because this PD array, or the candles that form this PD array, is touching the external range liquidity. And I mean, in another case, it could also be touching the external or internal range liquidity, like with this one here, right? This CIBI complex or inversion fair value gap complex that I drew. But in this case, it's touching the external range liquidity. So I label this as a 15-minute BISI. And because it's a 15-minute BISI touching a longer term PD array like this one, that's my trade. What bias do I have? I want it to go up. I want to see it continuing to go up. Where's my target? My target is both the new week opening gap here, and then from there, I want to see how it trades at very specific points within this entire buy side complex that we have here, right? Meaning, how do we trade when we get to the bottom of this highlighted in red daily CIBI that we have labeled? How do we trade at the bottom of this new week opening gap? How do we trade at the consequent encroachment or 50% of the new week opening gap? How do we trade at the top of the new week opening gap? How do we trade at the 50% mark of the daily CIBI, which is also our daily range high? And then how do we trade at 100% or the top of the daily CIBI? Then again, how do we trade here? So these are all PD arrays that are important on the weekly and daily time frames. And I'm using the 15-minute as our entry time frame that I'm watching the market to see if we get the formation of an inefficient market going directly towards our bias. i.e., do we get smaller 15-minute BISIs or even 5-minute BISIs along these key areas that I've highlighted, which is the 0, 50%, and 100% levels of these zones that we're drawing from the weekly and daily time frame, as well as the highs and lows, or in this case, the highs, because we think that the market is going to continue going up, right? So quite literally, we enter the trade here because we're touching this external range liquidity area. So I'm using this as a support level. And basically it starts to trade throughout the night. I fall asleep maybe midnight. Um, and then I wake up like around 5 a.m. Fast forward to 5 a.m. And cool. So I'm just like the way I'm reviewing this is exactly the way that I saw it. So before I fell asleep, actually, I did label this 15-minute balance price range. A balance price range is really simple. It's just defined by an area in the market where both sides of the market is traded to like consecutively, right? So it goes up here, and then in the same exact price range, it trades down. That counts as a balanced price range. This is another balanced price range here that I could have labeled at the top of the new week opening gap, right? But we're labeling our um, entry BISIs or SIBIs or PD arrays at the 0, 50%, and 100% areas of the longer term PD arrays, okay? So that's why I'm labeling this specific balance price range and this balance price range over this balance price range that's right here, because it's not as significant or an important a support and resistance point the same way that the 0, 50%, and 100% um, areas of this zone are sensitive to price, or price is sensitive to it, right? So we have that 15-minute balance price range. We form another 15-minute balance price range at the new week opening gap. So both of these, for me, I'm just using them as, I'm not really using them as confirmation. I'm just using them as like, it's noted. These are balance price ranges. Let's see if this is now treated as an area of support, because really what I'm looking for is inefficient running towards price, right? So I want to see BISIs rather in the direction of buy side form. We got a BISI that formed here at the 50% mark of the uh, daily SIBI high, or sorry, at the daily SIBI 50% point. It also overlaps the daily range high from Monday. So the fact that we got a BISI forming over that was confirmation that price is going to continue going up, right? So we formed one BISI here. We think price is going to go up from here. It starts to go up. It gets to this major liquidity area, which is also another point where you could sell, you know, but it gives us another BISI pointing upward towards more liquidity it wants to take to the upside. It gives us another one here at the 100% point of the daily um, SIBI here, and eventually I just sell here. I think we get close enough to um, our eventual target, which is the previous week high, but from here I was willing to close the trade. Um, This is the 5 a.m. 15-minute candle. So that was a trade there. It was about a 6-to-1 trade. So I risked one to make six. Um, this is a bread and butter. Like this is exactly what we're looking for in the market. Inefficient price runs towards our chosen target liquidity area. So I hope this was helpful as a review for Monday, Tuesday, and Wednesday. Um, we'll tap back in come this weekend on Saturday. Peace.